G'day traders, Stacey Burke from Stacey Burke Trading. Today talking about trading 1 hour a day, mastering the setups, and avoiding the news. So we had the Fed last night, and I received some emails yesterday and today asking me how I would trade the Fed and all these sort of things. My response to that is that why would you want to trade the Fed? There are plenty of really good trade opportunities every single day without trying to trade the volatility that's involved with the Fed. It's not rocket science to know that it will usually spike one end and reverse to the other side. I see traders out there predicting that it's going to do this and going to do that and how to trade it. And my response is always, why would you want to trade that? Obviously there are opportunities when it's very clean and very simple. But at the same time, there's a lot of low stress, high probability, great trading setups every single day that are scalable in size and that don't involve the stress involved with placing size into a market that has the volatility that the Fed does. So coming back to today and looking at the 3-day template, we talked about this the other day at the beginning of the month. Typically, we can often see continuations or reversals, and we had a brilliant 3-day setup on almost every single pair. Now, to go back and review, first day of the month, we have our beginning of the week, the pink line. We'll just scroll through the different pairs quickly. And again, I received some questions regarding how I begin my own count. Now, this is what I do, and I don't really care what other people think, right or wrong, how they count levels and all these things. My approach to the markets is super simple, and that's because unless it's simple, you can't replicate it. And I know that there's all these theories and concepts and terms that different people use, and I don't like to repeat any of it because it just acknowledges that there might be some validity. Look, the market goes up and down and sideways. That's all it does. There's nothing else. There is just nothing else. It trends, it reverses, it goes in a trading range. So those are the only three things that markets do. We have cycles that repeat every 24 hours. We have cycles that repeat Monday to Friday, and we have cycles that repeat monthly. So my approach is simple. I want to buy low and I want to sell high. That's all there is to it. If I'm buying low, I want to sell high. If I'm selling high, I want to buy low. That's it. So coming back to the 3-day cycle, when a market breaches a previous days or weeks level and volume gets trapped and a peak formation forms, okay, we had a peak formation on Thursday, Friday, where volume got trapped below the low of the week before they reversed, and they put in a peak formation at the peak on a Friday. So the last peak formation that forms is when I start my count. So obviously on Thursday I started day 1, but then we had day 2 put in a peak formation, and we had a revisit into level 3 for the sell. So in simple terms, if the peak formation is on the bottom, that's level 1. Inside is level 2. And where the next peak formation is level 3. And as one trader asked me, do I start the count again at level 3 going the other way? And that is correct. Going down, now this becomes day 1, day 2, and then day 3. And what do we see below day 3 at the low of the month? Even though it's inside the previous low of the week, it's still the low of the new month. Day 3. Day 1 coming back up. Goes right up into level 3. We have a peak formation. Day 1 down. Day 1. Day 2. Level 2. So we have a day 1 peak formation low of the month. Day 2 that puts in a peak formation high at the high of the week. And then we come back down into layer 2. Level 2. Level 2 is where we will see explosive moves go vertical. Level 2. So we have level 1. Day 1, level 1 typically. Day 2 can often be level 2, but we may see day 2 consolidate or pull back into level 1 or take out the high of day 1 and form level 3 on the top side for a sell setup potentially, or a day 3 reversal trade if day 2 is down low. And the news acts as a catalyst, taking the market out of level 2, and now we are into day 1, day 2, day 3, and this market could put a midweek reset peak formation low in to continue and start the cycle again, going back up where that original move started. Now, that could take a few weeks. In some explosive markets, this can happen in a few days. But unless we see volume get trapped on the top side now and reverse back down, we are currently in an up mode on this pair. Day one, we had day one, day two pulled back, day three went into level 2. We've cleared out the high of the week, and now we are in a long trade. Day one, day two, day three, the 3-day cycle. As I talked about in the video earlier last week, the beginnings of the month, the ends of the month are oftentimes when we'll see either a reversal, or even if it's just a pullback, we could still revisit these lows. But this week now has put in a peak formation low for the week, beginning of the month. We've put a low of the month in, and now we're on our way back up. Pound, same thing. We had a peak formation low put in on Thursday, day one. Day two was Friday. Peak formation high on Friday. A retest back up into level 3 for the sell setup. We had a day 3 setup for a sell on Monday. Day one Monday, but day 3 sell setup on Monday. Same thing. They came down back into level 1. Creeping trend down into level 1 for the short squeeze explosive move on the Fed. Aussie dollar, perfect. We had peak formation low put in on Thursday. Trap volume. So somebody asked, what do you mean by trap volume? Well, when the market goes back up above the previous day's low, all this volume that sold down low is now trapped, which means they're going to go further away to either blow out these accounts if they haven't been stopped out yet, or to put in the maximum amount of stress on longer time frame traders who are short at the break of the previous day's low. Typically their stop will be up high, and if they've lowered it down to the high of the day, they've gone back up through the high of the day, putting in a peak formation and a day one, day two sell setup at the high of the previous day's high on Friday for the sell back down into level 1. They came out of level 1, went sideways into level 2, layered on top of the previous day's high on Tuesday for the straightaway vertical move on the Fed news release. Swiss franc, we had a day 1 on Monday. Day 1, trap volume below the previous day's low. We're in a strong uptrend on the carry trade. We took out the high of Tuesday. Peak formation low back into level 1. Took out the high of Tuesday. They went vertical, and then the Fed rocketed down, and we have trap volume up high on day 3, again at the high of the week. Now, this may be in a reversal, or we may just be putting in a peak formation low reset to start the move back up again, back towards the high not only of the month, the week, and I believe the year. But time will tell. We may see a retest back up into level 3, where we could get a sell setup for the beginning of the move down. Again, interest rates, all these things play a role why these carry trades are in place. But you'll notice this peak formation on Tuesday came back inside of level 1. So we see this peak formation dip down into level 1 and then go back up to level 2 and continue. And we had 1, 2, 3 pushes on Wednesday into the Fed, and then the vertical move down, day 3 sell high opportunity. Again, I don't trade the news. I don't even want to trade the news. In this particular pair, this probably was an ideal trade opportunity. But again, it depends on how fast they wick up. There's obviously a level at 98.50. And if we look at gold, we can see the same thing. I started the count on Friday. We had day 1 was Friday's high, which came out of day 1 on Thursday. And again, day 1, peak formation low. We had level 1, level 2, and then level 3, 1 push, 2 push, 3 pushes for the sell reversal on Friday at the high of the day at the beginning of the U.S. session. So again, timings, high lows. I won't even look at a market until the session windows start, because I know that they'll manipulate, can discombobulate, and do everything else. So we had our peak formation high day 1 on Friday, day 2 down on Monday, and then peak formation low on Wednesday. And I again reiterate that level 3 day 1 can become day 1 going the other way. And we had level 3 took out the peak formation low of the U.S. session and that forms a geometrical rectangle at the low of the week, the low of the month. And again, we talked about this in the last video about the 3-day cycles, looking for one of three things: reversals, trend trades, or potentially just to be in the trading range. Day 2, yesterday the Fed acts as a news catalyst, taking us back up in towards level 3. Somebody asked me, how do you know what the high of the week is? Well, Monday is for day 1, and that's the beginning of the week, and that is the high of the week. That's as simple as and complicated as I get. That's the high of the week. So if you just look back at the simple template, they went down, they put a low in place, they broke structure, creeping trend back into the low for the short squeeze back out of level 2, taking us back up to level 3. It's that simple. And again, if you stick to the timing windows, go and check out what time these lows were. London, peak formation high, U.S. session after the first hour, peak formation high. It's the same thing. The Fed was a news release, obviously. But day 1, day 2, day 3. Oil, a bit more of a volatile market, but the same principles apply. You can do this on crypto. You can do whatever you want, but it's the same thing. It doesn't matter what market it is. They're all driven by people. We had day 1 on Monday on oil, peak formation, reversal structure, which you'll notice if we just project this high of that peak formation across, it aligns with the low of Friday, interestingly enough. Level 1, day 1. Day 2, level 2, peak formation, stop hunt down into day 1, into level 1 for the explosive move. Oh, sorry, this is the NASDAQ, not oil. Explosive move vertically. So again, coming back to the NASDAQ, and I saw a comment where somebody talked about trading the indexes and all that, and this is actually not a bad, 15-minute 1-bar bottom reversal. Just bring this across. Again, after the U.S. session has opened and broken through the previous day's low into the level 1 of Monday, we had a 3-bar consolidation reversal, and you have to expect that they will take out an extreme before the Fed. The risky part of this, of course, is that if you're holding on to this in hopes that they go higher, you might have moved your stop to break even, but even if they spike through that, you can get slippage, massive slippage on this sort of volatility. And if you don't have a stop and you're just, optimistic that this will explode through, if they do pin below you, they could go 50, 100 pips below before they reverse this market. And again, I reiterate, who cares if it's going to go to the low and then straight up, or to the high and down and back up? Like, why trade that sort of volatility? Trade this move out and get out of the market, lock it in, and come back the next day without any stress and having the money in your bank account. And coming back to oil, again, we had day 1 on Friday, peak formation. Whenever I see a peak formation like this, I automatically am drawing that as a potential target, on the way back up. Now, oil is a bit more volatile in nature, and I reiterate, I don't trade all this stuff. I'm looking for specific setups at timings. If I look at this market and we're inside, I'm already thinking day 2, creeping trend down, possibly a day 3 trade. I don't look to try and be the wizard that knows all this stuff in here and about where it's going to go to and what fib extension. To me, that's just for myself. That's ridiculous. I'm looking for easy to trade setups. That's it. I cannot reinforce that enough. You trade this garbage long enough, you're going to get blown out, and even if you're right, you can get blown out. So don't even bother. I mean, I don't care how smart people are or how much they know about the markets. To me, that's just a recipe for stressful trading, which is what I do not want to be doing. You'll notice the pin of this low of oil on the peak formation low on Monday goes down just inside of Thursday's peak formation low. Friday was day 1. Massive reversal. We could call this whole consolidation level 1. So again, level 1 is the buying level. Level 2 will often be where the explosive move comes out of after they revisit level 3 or level 1. So they pull it back down into level 1, go sideways, boom, for the rocket ship back up. And again, you'll notice what time that happened at. The Europe window straight up through the high of Tuesday. And again, back to the high of where that move started down from, the dump and pump Dump and pump. Day 1 down, day 2 down. Peak formation load. Start the count back up. They took out the high of the day. So even though it's in the same day, that's a reversal day. What do we call this? First green day. Creeping trend down. If this was a first green day setup for a sell setup, they would have took the high out and put peak formations in and rolled it over. What did they do though? Creeping trend down back into level 1, sideways for the explosive move back up, not only through the high of the day, but to the high of where that move started down, high of the week. So hopefully you got value from today's video, traders. Make it as simple as complicated as you want, because I received emails from people saying, oh, that 3-day setups, BS and everything else. Who cares? I don't care what people think. I care about, does the setup work? Does it make money? Did it put me into profits? Lock in the profits. Manage your risk. Buy low, sell high, buy low. It's as simple as that. I don't care about fib extensions. I don't care about any of that stuff. I care about, do I have a setup in my 12 candle window? Does it match one of my best trading setup ideas? Is it high probability, low probability? Low probability, I manage my size. I keep my size small. Learn that the hard way. Is it high probability? Yes, it is. I'm going to scale into that trade. I'm going to add a position. Is it accelerating? Is it doing what it should be doing? Is it behaving as it should? Is it got the potential to be an explosive move? Yes, it does. Okay, I'm adding. Okay, now I'm adjusting. I'm taking some out. I'm going to watch this now. I'm going to manage. I'm going to take some out again. I'm going to manage this. I'm going to let a trailer hold on to this because this has potential for a measured move. Simple as that. Once I lock it in, maybe the low of the month, I might even leave a trailer if I think this trade has the potential to keep going even further. That's all up to your individual trading model, how you want to manage the trade, what you learn from some of your best trade setups, how you could have squeezed more out of a winning trade. Could you have put in more size and still controlled your risk and still managed it if it was a losing trade? All of those things. This comes from, school of hard knocks, but keep it simple, keep it reproducible, and keep it duplicatable, and get really, really good at it. Scale it up in size and stay consistent. Don't go outside of your plans. If you start a new model and you want to test it super small. Know that you have an edge. And then once you're convinced that you have an edge and that it's reproducible, start adding that to your live playbook trade setups. Keep it simple, traders. Have a great day. Hopefully you got value from today's video. Keep getting better, and may the markets go with you.